As of today, Saturday, January 3, 2026, the stock market is currently closed for the weekend. The SanDisk Corp stock, trading under the ticker symbol SNDK on the NASDAQ, finished the first trading session of the year on Friday, January 2, 2026, at a price of $275.24 USD. This represents a massive intraday surge of 37.86 USD, or 15.95%, a movement that has left even seasoned analysts scrambling to update their models. While many expected the semiconductor sector to take a breather after the holiday rally, SanDisk has done the opposite, showing an aggressive strength that signals a fundamental shift in how the market values the storage side of the intelligence architecture. Most people look at SanDisk and think of the small SD cards they put in their cameras or the USB drives sitting in their desk drawers, but the reality is that the company you see today is a completely different animal than the one that dominated consumer electronics a decade ago. The SanDisk of 2026 has transitioned into a heavyweight in the high-performance data center space, and this latest price action is a direct reflection of a supply-demand imbalance in NAND flash memory that caught the broader market off guard. If you are tracking this through your Robinhood app or monitoring your individual brokerage account, you might be wondering why a storage company is suddenly behaving like a high-growth software stock. The common expectation was that memory would remain a cyclical commodity, prone to the same boom and bust patterns we have seen for 30 years. Investors thought that once the initial rush for server hardware settled, companies like SanDisk would see their margins compress. The reality we are seeing in the 2026 data is that the storage requirement for large-scale training models has not just grown, it has matured into a persistent high-margin necessity. While NVIDIA stock often gets the spotlight for the processing power, SanDisk is proving to be the essential silent partner. Without the massive high-speed solid-state arrays that SanDisk produces, those processors would essentially be high-speed engines with no fuel tank. This realization is what drove the 15% jump we saw on Friday, as institutional investors repositioned their portfolios to account for what is being called a historic upcycle in memory pricing. When you look at the trading volume from the last session, which exceeded 11 million shares, it becomes clear that this was not just retail momentum. We are seeing significant institutional accumulation. For those using online investing platforms or seeking investment help through services like Schwab Intelligent Portfolios, the question is whether this is a peak or a launching pad. To understand the motion of the stock, we have to look at the macroeconomic pressures and the sector momentum. Right now, there is a distinct divergence between consumer-facing tech and infrastructure tech. While Apple stock and Tesla stock have faced their own sets of headwinds regarding global consumer spending and delivery figures, the enterprise storage sector is operating in a vacuum of intense demand. The recent price targets from major analysts have been adjusted upward, with some suggesting that SanDisk could see even more upside as we head toward the fiscal second quarter earnings call. SanDisk has managed to separate itself from the pack by focusing on its BICS8 NAND architecture, which provides the density and speed required for the latest generation of AI-integrated servers. If you are using investing sites or a Fidelity trading platform to manage your long-term holdings, you have likely noticed that storage names were the sleeper hit of late 2025. SanDisk actually ended 2025 as one of the best-performing stocks in the S&P 500, a fact that many missed because they were too focused on the more glamorous names in the chip space. The current momentum is fueled by the fact that NAND flash prices grew by a mid-teen percentage in the most recent quarter, and demand for high-bandwidth memory chips is expected to stay at these levels through the rest of 2026. This creates a situation where SanDisk has significant pricing power, a luxury they haven't enjoyed in previous cycles. Let's pause here for a second and look at the history, because it provides context for why this ticker even exists in this form today. SanDisk was a pioneer in flash memory, founded back in 1988, and eventually became a staple of the tech world. In 2016, Western Digital acquired them for about $19 billion, aiming to create a storage powerhouse that combined traditional hard drives with modern flash technology. However, as the markets evolved, the synergies between the two businesses began to fray. The recent spin-off that brought SanDisk back as an independent entity was designed to let the flash business run at the speed of the semiconductor market without being weighed down by the slower-moving legacy storage business. This move has been validated by the market in the most aggressive way possible. For those who enjoy self-investing or are navigating their Fidelity iris, the return of SNDK as a standalone ticker has provided a pure play opportunity that was previously hidden inside a larger conglomerate. Looking at the technicals, the stock is currently trading near its 52-week high of 284.76 USD. The fact that it rallied nearly 16% on a day when the NASDAQ was relatively flat tells you everything you need to know about where the smart money is moving. Institutional activity has been particularly heavy in the after-hours sessions lately, suggesting that large funds are trying to build positions without spiking the price too much during regular hours, though they clearly didn't succeed in hiding their tracks on Friday. Whether you are using the Fidelity mobile app or Interactive Brokers trading, the volume spikes are a clear indicator of high conviction. Comment below how many shares of SanDisk you currently hold, or if you are waiting for a dip to enter this position. The tension here is that everyone is waiting for a correction that might not come, as the reality of the earnings potential continues to outpace the expectations set by the analysts just a few months ago. The business model for SanDisk today is built on three pillars: data center SSDs, automotive storage, and high-end consumer products. The data center segment is the crown jewel. As companies move towards centralized computing power, the performance requirements for these storage arrays are hitting the ceiling. SanDisk is one of the few players with the vertical integration necessary to control costs while pushing the boundaries of what flash memory can do. Their partnership with companies like Samsung and SK Hynix has also stabilized, as the industry has collectively realized that keeping supply in check is better for everyone's bottom line than the price wars of the past. This disciplined approach to capacity is what is keeping margins at record levels, a far cry from the days when SanDisk had to slash prices just to move inventory. For investors utilizing SoFi Invest or those looking for automated options through a SoFi robo-advisor, the volatility of a name like SanDisk has to be balanced against the secular growth of the industry. We are not just looking at a better year for storage, we are looking at a fundamental repricing of what this technology is worth to the global economy. In a world where data is the most valuable asset, the vaults that hold that data become equally valuable. This is the logic that is driving the current valuation. While the price-to-earnings ratio might look stretched compared to historical averages, you have to look at the forward earnings. SanDisk is projected to report earnings per share that could be as much as 70% above previous estimates if NAND pricing holds. This is why the stock is behaving the way it is. The risks, of course, are still present. Geopolitical tensions always hang over the semiconductor sector like a cloud. Export controls and trade policies can change with a single headline, affecting how SanDisk gets its products to global markets. Furthermore, any slowdown in the massive capital expenditures from the big cloud providers would hit SanDisk first. But the current reality is that these companies are in an arms race, and you don't win an arms race by cutting your budget for essential components. For those trading on an Interactive Brokers platform, keeping a close eye on the capital expenditure reports from the big hyperscalers is going to be the best way to front-run the next move in SanDisk. If you are managing your investment through Fidelity Wealth Management or active trading accounts on the Robinhood trading platform, you need to be aware of the sentiment shift. For a long time, SanDisk was seen as the underdog, the component maker that lived in the shadow of the giants. Today, they are a leader in a sector that is finally getting its due. The expectation was that they would be a support act in the AI story, but the reality is that they are becoming a main character. This contrast is exactly what creates the kind of explosive growth we saw on Friday. The market is finally catching up to the reality that the storage wall is a real problem for high-performance computing, and SanDisk has the solution. As we look toward the next few weeks of trading, the catalysts are lining up. We have the Consumer Electronics Show, where we expect to see new applications for high-speed storage in the automotive and mobile sectors. We also have the lead-up to the earnings season, where companies like SanDisk often give guidance that can move the entire sector. If you are using SoFi Active Investing or a Fidelity brokerage account, you want to be positioned before the news breaks, not after. The 16% move we just saw might feel like you missed the boat, but in a long-term cycle, it could just be the start of a much larger trend. The depth of this movement is supported by the fact that SanDisk's balance sheet is cleaner than it has been in years. They have used the recent cash flow to pay down debt and invest in research, ensuring they stay ahead of the competition. This isn't just about catching a wave, it's about building a better surfboard. The innovations they are bringing to market in 3D NAND and high-density storage are setting a new standard for the industry.